right, everybody, welcome back to another episode of the Evernest Real Estate Investor Podcast. I am one of your hosts, Spencer Sutton, and great. Matthew was here last week for the podcast, and now we've moved on from Matthew, and glad to have you back in the co-host seat.
You're the consistent one out of the two of us, and I'm sure people appreciate that.
Yeah, I am consistent. But listen, I'm excited about our guest today. We have an investor, a broker and an investor from San Diego, Jason Lee. Jason, welcome to the show, man.
Hey, Spencer. Thanks for having me. Good to be here. Yeah,
well, we're excited to dive in. I do want to talk a little bit about your bio here because I think it's very impressive. So just want to talk a little bit about what you've done there in San Diego to kind of give our audience a background. You are, over the past couple of years, you've represented over 100 investors and you've closed over $250 million worth of real estate in San Diego County, which that's very impressive. And then you yourself also are an investor in over $45 million worth of real estate in San Diego, which includes over 100 units. So, man, congrats on all that. And You've just been in the business like 6 years.
Thank you. I appreciate it.
Well, cool. Well, I think this is just reading that gets me very, very curious about, you've been doing this just over 6 years. Like, talk about how you got started, what drew you to real estate, why you decided real estate, and where you were when you made that decision, like career-wise, school-wise, like what were you doing when you finally made the decision and committed that you wanted to do something in real estate?
Yeah. So I actually started as an intern at my old commercial real estate firm where I kind of learned the entire business here in San Diego, March of 2018. So it's been like a little over, it's been almost 5 years now. And at that point in my life, I was a junior at San Diego State. I was a third-year student in San Diego. But my life before that, I was pretty lost, had no direction in life, didn't know what I wanted to do. I was kind of going down a track that my parents thought would be the best for me, not what I thought was best for me. So I was going down like the medical route because my aunt was a dentist and my uncle was a anesthesiologist, but my parents they had, lower to middle class jobs. So they kind of looked up to them and thought that I should be like them, like their brother or whatever. So they kind of forced me down a path that I hated. Eventually, middle of school, I hit a breaking point where, I was so miserable and depressed. I had to change my career entirely. And I changed my major this one night after I finished my organic chemistry final. I was so pissed off that day. I just couldn't take any more of it. And I threw my notebook in the trash can. I switched my major to communication to graduate as fast as I could, the easiest major I could find. And then I networked with all my friends that I've made around campus and joined the Real Estate Society. And then the rest is kind of history. So that's how I got into real estate. A lot of people ask me why I got into multifamily real estate, because it's a very niche asset. Why didn't I become a single family agent or anything else? I honestly just kind of fell into it. I hit it off with a guy at a networking event at my school, my old mentor who trained me, who taught me everything in the industry. So I kind of just got lucky and fell into an amazing asset class, an amazing business. You guys are in the business. You know how great multifamily is, how steady it is, how recession resistant. There's always demand for it. So super blessed to be where I'm at today.
That's pretty awesome. I'd like to know, if you don't mind sharing, I'd love to know how your parents took the news when you said, "Hey, I'm done with all this studying to be a doctor, and this is where I'm going."
Yeah, they took it horribly. I had to cut them off for 6 months because my mom was sending me like real job, Indeed notifications telling me to get a real job with a salary. You're going down a bad path. You're an idiot. You're not going to make any money. It was the most negative feedback I could have gotten. So didn't talk to him for 6 months to a year, was just hitting the phones, 12 hours a day, trying to call owners, trying to connect with people, trying to find buyers and sellers. And eventually it paid off. I mean, so yeah, my parents did not take it lightly. to answer your question.
Did that motivate you to like press in? I mean, because you're talking about hitting the phones, and you're essentially what you're talking about is cold calling, right?
Yep.
So you were literally cold calling owners of, I'm guessing, apartment complexes or whatever, just trying to see, hey, are you interested in selling, or do you want to buy more? Like, talk about grinding it out that way, because that's not easy to do. And then how long did it take you before you got to the point where you said, okay, this is working?
All great questions. So I was taught to just hit the phones, be organized, follow up with people. That's like the only way to kind of get started in commercial real estate. So, there's other methods, but when you're first starting and you have no money, just calling people direct is the fastest way to grow your business, and anything, in my opinion. But it took me about, I'd say, 6 months to really see any sort of return. I didn't do a deal for the first like 6 or 7 months of my career. I was getting some leads here and there, but like one didn't really come to fruition until like 6, 7 months in. What's really funny about that though is 6 months in, I had made no money, because it's, in brokerage, it's you eat what you kill. If you make sales, you make money. If you don't make sales, you're hungry, right? So 6 months in, I got my first listing. And then the day after we signed up the listing, it was a fourplex here in San Diego. The owner unexpectedly passed away, and he didn't have a will or a trust for his kids. So the property went to probate. And if you're watching the show, you don't know what probate is. In the simplest terms, if an owner passes away and doesn't have a trust for their family, something to go to the heirs in writing, it goes to the state or the government in your county or city, whatever it is, to now handle the sale of the property. So when that happened, I almost quit the business. I literally almost, I was the worst day of my life, I think.
Probate's a really quick process. They get in, they get out without a week. They know where the building goes, right?
You're exactly right. No, it's the exact opposite. Takes like 1 to 2 years to get it out, but this one took like 6 or 7. It was faster. But when that happened, that was like probably rock bottom for me, because people were in my ear more than ever to quit, that I was, taking the wrong path. And when that happened, I was like, man, but that goes to show that failure and success live right next to each other, because right when that happened, I was this close to quitting, but I didn't. I just stuck it out for 1 more month, and I ended up getting, 2 more listings next month. And then from there, like, my career has been a really fast trajectory. So I was super close. It's like that analogy where you're like that little meme where you're like digging to the gold, and then the guy will stop right when the gold's there, and he kind of runs up, right, because he's done with it. So I was in that crossroads at that time.
And I think what's interesting though is, I think there's determined people when you kind of go down the wrong path. How did you know that real estate was the right path? Like, what did your mentor tell you when you kind of knew, like, hey, there are riches in this business? How much kind of analysis did you go in? Because it's a hard business, like full commission, you eat what you kill. I mean, that's some stressful times. How did you think about that? And I assume that's why you picked real estate, but what were some of those conversations early on?
Yeah, I think what really kept me going is that my mentor, my broker, he had like 25 agents at his company here, and like 5 or 6 of them were absolutely crushing it. One guy, was, making well over $2 million a year net. And when I talked to that guy, when I talked to some of their agents, like, they didn't seem like they had anything, special, like no crazy talents or insane ability to make a certain amount of money. They've just been doing it for a long time. So I think that's what kind of kept me going, is seeing guys who've already made it and trying to emulate what they did and learning from them. I feel like if I had no direction or any sort of example set by people, I think I'd be out of the business. So I think someone who's looking to get into the business, whether it's, whether you're trying to be a lender, a broker, a property manager, anything, when you're trying to get into something new, you have to have some sort of direction from the people who have already walked the path that you're trying to walk. So that was probably the most pivotal thing that kind of made me stick around.
Yeah. What about, you see people who aren't like, there's no special skill or talent they have hustle, and they just grind and work, and they're in the right industry. That's a pretty comforting thing for me, at least, because it's like, hey, I'm not the smartest guy in the room, but if you can go out there and hustle, it will lead to really good things. One question, I think this is a pretty like, I've heard this from a number of investors who move into syndicating eventually, but you just get exposure to, valuing business or valuing buildings, looking at rent rolls, talking to different owners. I would assume this is a great route. Like, would you recommend this to other people looking to get into real estate? Because you can make a lot of money, but like, is this a route that you would like recommend other younger people who are interested in getting real estate emulating?
Yeah, I think if you have the personality and kind of the work ethic to kind of be a broker, then yes, not it's not for everyone. Not everyone loves, being in the hustle and the grind every day. But I think if you have the personality for it, it's probably the best way to get into investing because, like you said, you learn the lingo of real estate. You're valuing buildings all the time. You're creating proposals for investors, and you're making relationships with investors who are, who've been in the business for a very long time and understand what a good deal is and a bad deal is, how to execute, how to asset manage the property. So I learned all those skills just from like asking my clients questions and from being in the business and valuing and looking at a bunch of buildings. So yeah, you're 100% right. It's a great segue in, but in my opinion, whether you get into, any sort of niche in real estate, I think it's a great segue as long as you're networking with people and learning the business. I think you can go into real estate in so many different fields and learn investing.
What do you mentioned the grind. It's good for somebody who can deal with the grind. Like, what is that mentality like? Because I'm imagining, you get that first deal and then all of a sudden it goes to probate. You're not going to get paid. You were all might have already been thinking about, I'm going to be able to pay for this. I'm going to be able to, pay my rent, whatever. Yeah. So talk about the mindset of somebody that is like what you have to succeed in this business, because you mentioned the grind. Like, what is that person? What are they like? What do you see in the common traits?
Yeah. It's a great question. We've got 7 or 8 agents at our company now here in San Diego that we started. And I think the biggest thing we look for is like, is this person, have they shown some sort of like, effort in their lives to where like they've been self-sufficient and they have some sort of leadership skills and they've shown some sort of, can they tell a story where they dealt with a hardship or adversity and overcame it? Because I think a great example is like usually people in brokerage who are brokers, if they were athletes before, like in high school or in college, athletes do really well in this kind of business because number one, it's competitive and athletes have to compete. And 2, athletes go through a lot of mental ups and downs. And when you go into brokerage, it's the exact same thing. You go through a lot of ups and downs of the business. When a deal falls apart, you're your absolute low. When you're closing, a big deal, you're your highest of highs. So I think having mental toughness and also having a big why on like, why do you want to go into a tough industry? You have to have a reason to want to make it, because if you don't have a vision or a clear goal that you're chasing, it's really tough to see like the long-term reward at the end of the road, because your first, 1 to 6 months to a year, when you're just calling all the time and not making any money when you go home, that can really get to your head. So if you don't see that long-term vision, it can really, it screws up a lot of people.
So what was your long-term vision that kept you going? Like, what was your why?
Yeah. My why was, even though like when I first started, my parents didn't have any belief in me. The whole reason why I wanted to become successful is because I wanted to give back to my mom, who didn't have like the same opportunity as I did here in America, because she was a first generation immigrant, barely spoke English. And to get ahead in America, I think the most important skill is to be able to effectively communicate with people. And she couldn't do that. And she also didn't have an education. So all the jobs she had throughout me growing up, I've seen her fail so many times. So I just wanted to like have a good life for her. So that's why I was in the office working every day to give back to my loved ones. So I think the why has to be outside of yourself. I think if you tell yourself, like, I just want to be rich and successful, it's like, that's a very egotistical goal to have. And usually goals based off of ego never really work out. So I think it's got to be outside of yourself if you really want to see some sort of light at the end of the tunnel.
I think I find it easy to negotiate with myself when it's all about me. It's easier for me to say, well, maybe I don't need to be that rich, right? So I don't have to work that hard. So it's easy to be easy on myself, as opposed to, like you're saying, having that outside target, that outside why. Yeah, that's good. So you told us a little bit about like low points, when you thought that, hey, I'm about to quit. This is not going to be for me. Talk about accomplishments you're most proud of. Like, what are some things that you're like, you look back now, even though, your career has spanned, not 10 or 20 years, but what accomplishments do you look back on and go, man, this was career changing, or something I'm very, very proud of?
Yeah. I mean, in 2021, probably the thing I'm most proud of was in 2021, being 3 years in the business. I sold more multifamily transactions than any other broker in San Diego County. I think that was the biggest, goal. I mean, it wasn't a goal, but like, I think like when I heard that, from CoStar, that was a pretty amazing thing to hear. Other than that, I think my second biggest accomplishment was, having the courage to buy my first investment property. Cause, as many of you know, that can be a very scary thing. And it was for me, because the first property I bought was a complete teardown, and I had to put so much work and sweat in that thing. But, I'd say those two things probably come to mind first.
So your first deal I'm guessing it was a multifamily, because you kind of skipped single family. A lot of investors go into single family first, then kind of graduate up to multifamily. So talk about that first deal, and just kind of walk us through that.
Yeah. First deal was a duplex. So almost a single family, pretty close.
Yeah.
It was in the, smack dab middle of San Diego, good location. The owner had inherited it. And the new owner lived in San Jose. And I called him one day asking if he would, consider selling the property. And he said it was being listed by his property manager, who's local here. And he was an older guy, and he knew the property needed a lot of work. Super cool manager. And he priced it pretty low because he knew it needed a lot of repairs. And I thought it was a good deal. And, I let him represent me, came in a little lower, but still got it before it went to market, because, we built a good relationship as the deal was coming together. And then after that, when I actually inspected the property, I came to find out it needed a whole new plumbing line. It was cast iron. That was 100-year-old property. So the plumbing was completely shot. The foundation had to be replaced, and that was like $100,000 repair. The roof was shot. There was mold everywhere. It was ridden with termites. Basically like your worst nightmare. But I was able to negotiate.
Listed off like the 7 biggest things you want to look out for a deal.
Exactly.
And you said, let me get that one.
Yeah. That's why I was so scared. 'Cause I was like, man, like I've been listening to all these podcasts, and like, these are like all the red flags, like of why you shouldn't buy a deal. And, but I made it work, because I knew even with the amount of repairs it needed like probably like $250,000 worth of work. I was able to negotiate half of that. So I reduced the price by like $120,000 in the negotiation period. And then it also had a lot of upside, because there was 2 freestanding garages that could be converted into legal ADUs, like cottages. So I turned that duplex into a 4-plex, bought it for $630,000. And then like a year later, after I made it a 4-unit, it appraised for $2.1 million. So that was probably, so yeah, I'm very proud of going through with it, because I was very close to backing out of the transaction.
Because that's a very intimidating. I think the reason Spencer mentioned a lot of people go single family, and maybe even like a turnkey move-in ready single family, is you don't have to deal with all those things. Did the 3 years as being a broker, you probably saw a ton of deals like that, knew a bunch of contractors. I assume that gave you the confidence to say, hey, I can piece this one together.
Yeah. I mean, a lot of my investors are people who have made their money through big renovations, forcing that appreciation, and either refinancing it or 1031 exchanging it into a bigger asset. So I knew that this was the way to kind of grow your portfolio quickly. Turnkey is great if you're first starting, because you don't need to do much. You don't really need to lift a finger, but it's also not the quickest way to growth, because especially in California, if you buy a turnkey property in California, you're probably not going to cash flow at all, probably negative cash flow if you get the max amount of debt. So it was one, I learned from my investors, but two, it's like buying rehabs in California is the only way to make money, in my opinion.
Yeah. And so you bought it for what, 630, you put 200 into it. Do you still own it today, or do you 1031 it and sell it?
Yeah. So I still own it today. The total cost was $400K, because I spent like another $200K to make those 2 legal units from garage conversions. So yeah, I was into it for a little over $1 million, and then I refied it and kept it. Refinanced with First Republic, got an interest only loan, and it spits out a lot of cash flow. So it's not worth selling it.
Look, man, one deal can change your life. I mean, that's like a life-changing amount of money for a lot of people, and to still be able to own that asset at 50% loan to value, or kind of your basis in there, super, super impressive. And I think also being in the business, you saw, hey, just as a duplex, there's value add here, but the ADUs are a big thing, at least in Denver where I'm at, and then in California. Like, having investors to be creative and think, hey, where else can I add value? That's where you probably extracted the most value, if I had to guess, just on a pure kind of like money put in and money come out basis.
Yeah, 100%. Couldn't agree more. Yeah. I mean, especially in like bigger cities like Denver, San Diego, Miami, Chicago, you got to be creative, because there's a lot of competition, and competition, lowers cap rates. It makes the returns lower. So you have to look at deals from a different angle, and ADU has been like a great way to kind of stand out from people who look at deal only, one way, whereas now you can look at a deal from a whole different kind of angle.
Love it, man. So where did you go from there? I know the beginning, we kind of jumped. I think you mentioned, hey, you started your own brokerage, and now you own over 100 units. Kind of talk about, what was the next step in your journey?
Yeah. Something I skipped over was when I bought my first property, I had another 3 or 4 properties in escrow to buy at the same time. So I had like 4 properties in the pipe. In 2021, I think we bought like 14 properties, my partner and I. My first property though closed end of 2020, but so yeah, like 2021 was a huge year. I found a lot of really good deals that year for some reason. I've got a team of guys who are on the phones finding properties like myself, and I've got like some full-time, cold callers for me. So I was able to find and extract a lot of value the past 2 or 3 years. And what's cool about our journey is we didn't raise any money at all to grow that portfolio. We just got a lot of hard money, private money debt, because my partner and I had a really good relationship where we split the equity 50-50. I found the deal, and then my partner ran a hard money fund, private money fund. So he was, putting up like, 90% LTV on our deals, and then we'd refi out of them or sell them for a profit, and then buy a bigger property. So, that was like, many people probably haven't heard that strategy in multifamily, because it is really risky. But if you're buying properties at, 20 to 30% below market value, then it's not as risky if you get high leverage.
How did you find this partner? Because I think that's a question a lot of people have, is like, hey, I've got, maybe a lot of time, or I've got time that I put into the business full time, but I don't have as much money. And so a lot of times those kind of pair up together. How did you go about finding your partner?
Yeah, fantastic question. This will help a lot of people. So, before you go into a partnership or even go looking for a partner, I think if you solicit someone, like send someone a DM on LinkedIn and say, hey, you want to be partners? It's like the worst way to go about it. And if you were like me and you didn't have any friends who were in the business or in real estate, the way I found that perfect partner is he was my client for, I think, over a year. We had done deals together. I'd sold him properties, and we developed a friendship, a really good relationship, built a lot of rapport. I knew how he operated, what kind of person he was. I knew I could trust him fully. Good morals, good values. So that's what I look for in a good partner. And me and him were talking one day at lunch, and after he closed a deal that he bought here in San Diego, And I told him I had some properties I was, in escrow to buy, and I couldn't fund all of it myself. And basically, we were talking about how we could make it work together. And in the beginning, I was asking him to loan me money for it because he's a lender, but he was kind of like, why don't we just, close these together and then, kind of grow a partnership. And so, yeah, it happened really organically. I think a partnership has to happen organically. You both have to be on the same page. You both have to bring two different skill sets to the table. I think if two partners do the exact same thing, it's like, what's the point? And you have to know that person really well. You can't just jump into a partnership when you don't know a lot about the other person.
Yeah, that's so true. That's good advice. So talk about the progression from them, because you and your partner are buying properties. Like, do you continue to like go for bigger and bigger properties? Do you kind of stick in the 4 to 10 unit range? What is after you got through 2021 into 2022, what happened?
Yeah. So in 2022, we exchanged a lot of our smaller properties. We sold them for a pretty good profit, and then we exchanged them into bigger buildings. So we sold like 2 fourplexes and bought a 24 unit building. We sold a couple 3 to 4 units and bought an 11 unit building by the beach. So yeah, we kind of traded up from the smaller to like, mid-sized mom and pop apartments. Yeah, I think the biggest building we own is a 24 unit. We still own the smaller stuff. Like we still have a 3 unit in a good location, but if it's below 5 units, we like to trade up into commercial type, 5+ multifamily.
And for as soon as a debt component, but talk about why would you want to trade up some of those smaller assets into the larger ones?
Yeah, biggest reason is that your property manager probably doesn't care about you if you own a small asset, at least here in San Diego. Maybe not other cities, but we had a lot of trouble, managing the smaller properties because, the managers we dealt with, even though they were great, they all had bigger, like 50, 60, 75 units in their portfolios. Like we were kind of like the last priority. But, we found 1 or 2 great managers who are really good in like the 1 to 4 unit space. But in the beginning, the reason why we started trading up was because we wanted, more scale. We wanted more units in one location. Asset managing a bunch of small little properties isn't the most time effective way to go. I would much rather own 50 units in one parcel than own, 20, 25 duplexes in different locations. So like, I think our goals align to where we want to have, as much many units in as few locations as possible. So that's why we wanted to trade up and scale out of the residential 1 to 4 unit properties. But everyone's goals aren't the same though. Like, if you like that, I mean, I'm not trying to hate on it at all, but it just depends on what your goals are for your portfolio.
Yeah, I think that's why what I love about real estate is you can make a bunch of money in single family or just staying in small multifamily. Like there's no pathway that you have to follow and you kind of have to trade up. And so whatever kind of works best for you. Like one question I had, so all this stuff that y'all own together is in San Diego, is that right? So kind of in your backyard?
Mm-hmm. Yeah.
What do you like about investing in San Diego? And have y'all looked at expanding into other markets, or kind of where y'all want to go from here?
Yeah, that's a great question. I think the time will come when when we're big enough, it'll make sense. But as of right now, when we only own units that are 24 units and below, to do that in another city doesn't really make sense. Plus, I understand this market really, really well, and I know every street, and multifamily and single family is very street by street. Things change a lot with on different blocks, especially in San Diego. But I'm a big fan of other markets. I think Denver's a really good market. I think Phoenix is a great market. I think Portland's an amazing market. So yeah, we definitely do want to in the future, but until we can get bigger economies of scale and have like a good team out there to where we want to go next, doesn't make sense at the moment for operational purposes.
Yeah, I think invest where and where you have like a unique upside, and you got the upside of being a broker and talking to owners all across San Diego for 3 years. And living there, you can go see these buildings very quickly, and then, having the partner come with the money side. So like, you can make it work if you're in a high cost of living. You just have to alter your strategy. There's probably maybe a little bit less on the cash flow side. You can add a lot more value in a market like California. There's other strategies, some of these lower markets where you might focus more on cash flow. But I mean, point per, you can be successful in any market. San Diego, I assume it's a high entry price. I mean, you got to have some capital to get started there, but you can make it work just kind of with what your skill sets are and what your partner skill sets is.
Yeah, exactly.
So when you were trading up to these properties, were these all still like value add plays? Is that what you were still looking for? Hey, we're trying to find distressed sellers and add as much equity as we can, kind of forced equity.
Yes and no. One property bought by the beach. That one wasn't distressed at all. It was a little below market value, but not too much. We just thought it was like a really good long-term hold to hold in our portfolio for a long time because the demand by the beach in San Diego, especially post-pandemic, has been insane, even right now. So we know that values will go up because demand's high. So that was a long-term play we did to exchange into a bigger building in a great location, good asset. But yeah, other than that, I think that 3 or 4 other trades that we did have been that kind of, value add, ADU potential, how can we maximize value on the property? But something like good to note for your audience is like, it's really hard. It gets harder and harder to find distressed properties the higher you go in unit count. Like if you compare a single family home to a 500 unit that Blackstone owns, like you're never going to find a distressed 500 unit deal out there. It doesn't exist. I mean, very rarely, but whereas like single family homes, it's a much different, even duplexes, fourplexes. It's a much different demographic, and usually people in that kind of asset class, there's usually more times of stress than people who own like the bigger, more like sophisticated assets.
Yeah. And you mentioned, you talked about, your property manager, you're obviously a broker. Talk a little bit about the importance of like building that team for investors out there who are looking to just get started in multifamily or whatever. Because I've heard a lot of investors that they didn't necessarily start the way you did by calling property owners. They started calling brokers. And started building relationships with brokers and letting them know, hey, they were serious and they wanted to, if there was anything that was coming on board, to let them know. So what do you think about like building a team?
Yeah. I can't stress enough how important that is. I think especially if you're like not in real estate for a career, like if you're a lawyer, dentist, whatever, I think it's super important to have like that core team around you. I think you got to have 1 or 2 really good brokers. You got to have 1 or 2 really good loan brokers, loan officers. And then I think the most important piece is you got to have a really good property manager on your side that you can trust to make sure your property is running properly, make sure the rents are getting collected, keeping up with maintenance, all that good stuff. So I think those 3 things are the most important. And then sometimes your property manager will have a contractor they work with, but having 2 or 3 of your own contractors is also really crucial to make sure that whenever you need to do a rehab, you have 1, 2, 3, maybe 4 guys ready to go. I think those 4 vendors are probably the most important. I'd say the 5th important. I haven't really used a real estate attorney much, but I know some people really like relying on that, person to make sure that all their contracts and all their due diligence is tight. But I'd say those 5 are the most important people you got to have on your team.
And with the broker component, so, hey, you got somebody like when you talk to a new client, because I'm sure that you get hit up a ton. I mean, my perception is there's a lot of demand for multifamily brokers to bring off market deals. What can newer investors do to let you know, hey, I'm serious? And like, how do they get their foot in the door with you?
Yeah, that's a really good question. I got asked this before, and the best thing I could say is if you're reaching out to a broker for the first time, whether it's a call, email, text, whatever it is, number 1, I would highly recommend calling the person, picking up the phone, because I myself and people that I know are much more likely to develop a relationship with you if we actually like hear your voice, know you're a real person, because we do get solicited by a lot of like spammers out there who are like trying to, lowball our listings and stuff, especially now. So I think, having that human to human connection is number one. I think number two, the most important tip I can give is you have to make sure that you give that agent or broker your criteria of what you're looking for. If you tell me, you give me a call, I've never talked to you before, and you say, I'm looking for a good deal anywhere in San Diego, I'm probably not going to keep you anywhere high on my list because there's no specifics on what you actually want. But now that same person calls me and says, hey, I'm looking for a fourplex in this submarket of San Diego at this price point, and I want it to be value add, not turnkey. Like, great. Like, now I have something to work with. But if the more specific you are, the better. If you tell someone you're just looking for a deal, usually they'll put you at the bottom of their list. So I'd say number one, follow up, call the broker, and two, be really specific with exactly what you want.
And let's say they do that, they're specific, you start sending them deals, they don't respond, they're slow to respond, or they say no to everything. What is, because I've heard that be a common thing with brokers. Yeah. Like, how do you handle that? What's the advice there?
Yeah. I think it's much better to say, I'm a pass on the property, but thank you for sending. I think that's much better than no response at all, because that actually tells me or another broker that you're actually looking and caring about what I'm sending you, and you're acknowledging it and communicating. So I would definitely recommend responding with something instead of just ignoring it if you don't like the deal. Now, let's say I've sent that person, 20 properties and they've said no to every single one. That just means there's a lack of communication there, because either the broker or the investor is screwing it up. Because if the investor told that broker exactly what they're looking for and they've said no every single time, either the broker is sending deals that aren't in their criteria, or two, the investor, might not be that serious or really looking to buy. So it's either one of the two things. But yeah,
it's a relationship. I mean, it just like, it takes building relationship and good communication. I mean, there's kind of like all basic things, but I think I've heard from all the investors like, oh, I can't get to the top of the list, or I'm only getting on market deals. And it's like, well, hey, you gotta build that relationship, maybe get face to face in front of them and let them know that you're serious. And like, hey, I've got capital ready and I will move if you send me this type of deal. That'll move you to the top of the list. Cause hey, you want to close. That's how you eat. You want to close deals, want to make money, and want to make sure these deals go to somebody who can close.
Exactly. Yeah. I mean, following up is absolute key. And what you said, like if you take a broker out to lunch, that'll really make you stand out. Hasn't really happened to me, but like usually brokers don't get taken out to lunch by investors. So if you are taking the time to do that, it really does set you apart from other people, because usually it's the broker asking for the appointment. So if you're the investor asking for the appointment with the broker, that really speaks volumes. But I think the fastest way to make a broker trust you and for you to go truly to the top of their list, from personal experience and from my colleagues' personal experiences, is you have to be someone that performs on time and does what they say they're going to do. Even if it's just one transaction, if you do one deal together and you made that broker's life easy and you did everything right, you didn't randomly ask for a price structure with no evidence, you didn't extend escrow for another 2 months for no reason. If you closed on time, I can promise you that broker will send you deals for the rest of your life, and will do so much more before other people that are on their list.
Yeah, 100%. I mean, how many deals does the average broker do in a year? Jason, what do you think?
I'd say like somewhere between, 5 to 10.
Yeah. So if you're one of those 5 or 10, they're going to remember you, especially as much involvements. And I was even thinking, if you're an investor and you're out there trying to build relationships with brokers and they're sending you deals and you're, for whatever reason or not, you're not able to, like, hey, this one's not going to work for me. What if you wrote them a letter or sent them a gift and said, hey, thanks for keeping me on your list. Thanks for sending me these deals. Like, any way you can make an impression, like Jason said, taking them out to lunch, is going to help your chances of still getting those deals. So just be creative and think about that, as opposed to just sending them an email and saying no thanks.
Exactly.
All right. Well, Jason, man, this has been great. I appreciate your time. And if somebody did want to like follow you on your journey, learn more about you, your company, or whatever, how can people find out more about you? And you also have a podcast if you want to share about your podcast as well.
Yeah. Easiest way to follow me or connect with me is on my socials on Instagram, YouTube, or TikTok. It's Jason Joseph Lee, my full name. And then, I run a podcast called the Multifamily Millionaire Real Income from Real Estate podcast. I've been doing that for about 2.5 years now, I think. So yeah, thanks for the shout out. Really appreciate it.
Awesome. All right, everybody. We will be back next week with another episode of the Evernest Real Estate Investor Podcast.